Here is a summary of Costco's fiscal second quarter 2026 earnings call, designed for clear and concise delivery. Introduction. Good afternoon, everyone. We are here today to discuss COSTCO Wholesale Corporation's fiscal second quarter 2026 financial results and February sales performance. As always, our discussion will include forward-looking statements, and actual results may differ due to various risks and uncertainties. Key financial metrics for Q2 2026. Net income reached $2.035 billion, a substantial increase of nearly 14% from $1.788 billion in Q2 2025. This translates to $4.58 per diluted share, up from $4.02 per diluted share last year. Net sales increased by 9.1% to $68.24 billion, up from $62.53 billion in the prior year's second quarter. Comparable sales grew by 7.4% overall. When adjusted for gasoline price deflation and foreign exchange impacts, comparable sales were still a strong 7.4%. Excluding gas sales entirely, and adjusting for foreign exchange, comparable sales were also up 7.4%. Digitally enabled comparable sales showed impressive growth of 22.6%, or 21.7% adjusted for FX. Traffic/shopping frequency increased by 3.1% worldwide. Average transaction/ticket was up 4.2% worldwide and 3.5% when excluding gas price deflation and FX changes. Membership fee income rose by 13.6% to $1.355 billion, an increase of $162 million. This growth was driven by a combination of member-base growth, executive membership upgrades, and approximately one-third attributed to the September 2024 U.S. and Canada membership fee increase. Executive memberships stood at 40.4 million, a 9.5% increase year-over-year. Total paid members reached 82.1 million, up 4.8% from last year. Gross margin reported a favorable increase of 17 basis points year-over-year, or 11 basis points excluding gas deflation, reaching 11.02%. Core-on-core margins were up 22 basis points, driven by improvements across non-food, food, sundries, and fresh categories. SG&A expense rate was higher year-over-year by 13 basis points, or 8 basis points excluding gas deflation, coming in at 9.19%. This increase was partly due to a rise in general liability reserves. CEO and CFO statements. Ron Vakris, CEO. Ron highlighted the company's agility in navigating tariff complexities, emphasizing their strategy to mitigate impacts through global sourcing, strengthening Kirkland's signature, and domestic sourcing. He noted the fluidity of tariff regulations and their commitment to passing savings to members. Vakris also detailed growth priorities, including an aggressive warehouse pipeline with 28 net new openings expected in fiscal year 26 and targeting 30+ annually thereafter. He touched upon digital enhancements improving checkout speed, employee productivity, and member experience through AI-driven personalization. Vakris reiterated Costco's role as a pricing authority, aiming to be the first to lower prices. Gary Miller-Chip, CFO. Gary provided a detailed financial breakdown of the quarter, emphasizing the strong net income and sales growth. He elaborated on the drivers of membership fee income, including the recent fee increase and growth in executive memberships. Miller-Chip discussed gross margin performance, highlighting the broad-based improvements and the positive impact of ancillary businesses like pharmacy. He also addressed SG&A, noting investments in technology and the impact of increased liability reserves. He provided an update on capital expenditures, projecting approximately $6.5 billion for the full year, supporting warehouse expansion and digital initiatives. Management's forecasts and outlook. Warehouse expansion. The company plans 28 net new warehouse openings in fiscal year 26 and is targeting 30-plus new openings per year in the coming years, with roughly over half in the U.S. and under half internationally. Digital growth. A clear roadmap for future digital enhancements is in place, with expectations to continue growing digitally enabled sales at a faster pace than overall sales. Inflation. Inflation softened in the second quarter, approaching low single digits, particularly in fresh food and sundries, with deflation in certain items like produce and eggs. However, the company will continue to monitor global events that could impact fuel costs and shipping. Future margins. Management expects fluctuations in margin elements quarter to quarter, but maintains a long-term focus on holistic business management, member value, and modest margin expansion through efficiencies. Significant risk factors. Tariffs. The ongoing evolution of global tariffs and their impact on product costs and pricing remains a significant concern. Geopolitical instability. The situation in the Middle East could impact fuel costs and shipping schedules. Economic conditions. While consumer spending has remained consistent, broader economic shifts could influence shopping behavior. Supply chain. While the supply chain was relatively stable in Q2, potential disruptions remain a consideration. Membership renewal rates. A slight decline in U.S. renewal rates, attributed to a growing percentage of new online members, is being addressed with targeted retention strategies. Highlights of the quarter: strong net income and sales growth, demonstrating robust financial performance. Comparable sales growth, driven by increased traffic and average transaction value. Digitally enabled sales surge, reflecting successful online strategies and investments. Merchandising success. Lunar New Year and Valentine's Day promotions, along with strong performance in fresh and non-food categories, including luxury items. Kirkland's signature expansion, continued introduction of new items and focus on value. Ancillary business growth, double-digit growth in pharmacy and food court. Digital innovations, personalization capabilities driving measurable impacts on e-commerce sales. Warehouse productivity enhancements, mobile wallet, pharmacy pay ahead, and employee pre-scan technology improving efficiency. Lowlights of the quarter: slight decline in U.S. membership renewal rate, primarily due to the growing proportion of online members who renew at a slightly lower rate. Increased SG&A rate, driven by higher general liability reserves. Gas price deflation, negatively impacted reported comparable sales. February sales update. February net sales were $21.69 billion, up 9.5% year over year. Comparable sales were strong at 7.9% overall, 7% adjusted for gas deflation and FX. Digitally enabled sales grew 21.8%, 20.8% adjusted for FX. The shift of Lunar and Chinese New Year positively impacted February sales, particularly in other international markets. This concludes our summary of Costco's fiscal second quarter 2026 earnings call. We appreciate your time and attention.